Those desirous of meeting me in Bahrain should come on the 24th of May, the Friday. We decided to do an event there because we had covered all Gulf countries and missed out only on Bahrain. Even during my long stay in Dammam, I had never made it across the causeway to Bahrain. So we decided that we'll visit Bahrain. I hope to see you in Bahrain on the 24th of May, the Friday. If you'd like to meet me, kindly message us to the WhatsApp number given below or drop a mail to the email ID given below. Once again, I thank you for your support.
Hi everyone, welcome back to Be Rich. I just wanted to quickly recap what's happening. Then I want to dive in about the future of Warren Buffett's Berkshire Hathaway and what might happen once Warren leaves. Before we get into that, some interesting news is Wall Street stocks are falling. Market is weighing on the strong wage data which is coming. Strong wage data means Americans are expecting higher and higher salaries. If they have higher and higher salaries, this is going to fuel bigger and more inflation. So having the Fed cut rates anytime soon seems like a fool's dream now. And hopefully, we will not have a rate hike, is what they're fearing. And at least the environment of having this kind of a high interest rate is going to be there for the foreseeable future. Taking all that into account, markets have been on a slump. So, is this an opportunity? Is this the blood on the streets? I do not know. But one cannot time the market, or one cannot try to catch a falling knife, as they say. So, if you have been tracking companies which you've been very keen on, very interested on, this might be an opportune time to look at them and see if it reaches the criteria which you have set out. If it matches those criteria, start sipping and dipping your fingers into these waters. But do be careful, don't get overzealous, don't get overexcited. There might be a bounce. If you do see a bounce, remember it's just a bounce. Don't panic, don't start selling. Keep all this in mind, and do keep in mind we are value investors here. We're not trading, we're not trying to make a quick buck. We're looking at the long term average and the long term returns. And businesses we are investing into, we're not buying something and selling it as a commodity. We're investors. So keep that in mind as you venture out into this. And this is something important I wanted to get out of the way. Second thing is 8 newspapers in the US are suing Microsoft and OpenAI on copyright infringement. Yes, I can understand this because newspaper and media industry has been under tremendous pressure, especially in the US. And print has been dying for some time and it's on the way out. And what is left is subscription-based journalism, which is there online. And we do know this kind of journalism has also been struggling because of lack of subscription and lack of support from the public. And whatever little there is now, OpenAI seems to be putting his fingers inside. And OpenAI and Microsoft artificial intelligence seems to be shifting through this and aggregating the news and composing and composting it and giving it to people in shorter and briefer methods so people can digest the news without reading an entire article or being stuck behind a paywall. Yes, but I don't think this will be a very hard case in the court to work either way because let's say I've taken a subscription of a newspaper and I copy paste the article into OpenAI and I ask it to crunch it for me so I can understand it better. Does that tantamount to copyright infringement? I do not know. So this kind of gets curious. It's a little bit of a gray area. We'll have to see what happens in the court, what happens when this thing is heard, and what will come out of it. What usually happens in kind of a situation is probably a fine will be have to pay it. But what is very clear is the writing on the wall is there that artificial intelligence is here to stay. The public seem to have an appetite for it, and there's going to be more of it everywhere and anywhere we see. So businesses need to learn to adapt and pivot and learn to absorb this and figure out how they themselves can use this to their advantage instead of trying to fight it. I did read articles about people in entertainment industry upset about it. I can understand them being upset about it, being in the creative sphere myself, but you cannot stop this or put the cat back inside, as they say. This is pretty much out in the open now, and we all have to learn to live with artificial intelligence and figure out ways and means of using it, leveraging it, and upskilling ourselves as it grows. Yes, the pace it's growing is unimaginable, and its velocity it's picking up is unimaginable. Seems to be accelerating each day and month, but we'll have to put our arms around it and embrace it because there's no way we can live without artificial intelligence going forward. As far as Indian news is concerned, Godrej family split is very clear, and it has as an investor, there's no opportunity for us in it. It is more of purely entertainment and informative, so you can read it. If you're into the Goddard family or into business empires, how they build and how they separate, how they split. You can definitely read into it, but I do not see as any opportunity for investors to really dive into it. And Ashirwad Microfinance gets SEBI nod for Manappuram shares jumped 6% and have moved back above the 200 mark post announcement. So this is also of great interest. Ashirwad Microfinance has filed for its preliminary IPO and SEBI in October last year, and the IPO has a face value of 10 rupees per share and equity shares of 1,500 crores with no offer for sale component. 75% of the issue size will be available in QIB, and 15% will be reserved for non-institutional bidders, and not more than 10% will be reserved for retail investors. So this is something to keep in mind and to keep in your books if you're interested in this. Now, aside from this, of course, the main news which I wanted to hit upon is the first Berkshire Hathaway meeting shareholders will be having without Charlie Munger there. And we all remember historically the chairs will be placed such that Buffett on one side, Charlie on the other side. And now we'll have an empty chair where Charlie used to be. And he will be sorely missed by Buffett and everybody who will be attending this. And Vice Chairman Ajit Jain and Greg Abel will be taking questions for up to 5 hours, they're saying. They'll be taking 40 to 60 questions over a period of 5 hours. And Buffett is expected to offer insights into global turmoil, but he'll shy away from politics because it's election season there. He'll definitely talk about AI and Apple because Berkshire Hathaway's largest holding is Apple, where 45% of its portfolio is weighted in that. So potential questions which Buffett will probably answer is about artificial intelligence and implications in technology firms. Of course, he will also talk about oil versus clean energy because Berkshire Hathaway has raised its stakes in oil companies like Chevron and Occidental Petroleum. He could also address the bullish stance it's taking on oil, shifting away towards clean energy and change concerns. I'm sure he'll talk about Japan because of all the stuff they've been doing in Japan, and how he's been investing in Japan will definitely be there. And this reduction in stake in BYD, why is this been happening? I'm sure he'll talk about that. And realty investments, the short-term investments with house builder DR Horton, and later that was liquidated. So I'm sure he'll talk about all that. My main thing is, which I wanted to talk about today, was what's going to happen. He is 93 years old and Munger left us at 99. So what do we expect? Because the days are coming closer and closer when they will be there, when Berkshire Hathaway will not be run by Warren Buffett, or Warren Buffett will not be sitting there. And they are expecting he'll be stepping down, especially after the Charlie Munger has left. The portfolio of Berkshire Hathaway is valued at $354 billion and is managed currently by Buffett's protege Ted Welcher and Todd Combs. Todd Combs and Welcher have an extensive background in finance, and Combs started in insurance and worked through several hedge funds and founded Castle Point Capital. And he's 53. And Welcher is 61, and he started as a junior analyst in W.R. Grace, co-founded Quad C Management, and launched his own hedge fund in 2000. Both successors have investment style similar to Buffett, emphasizing on long-term value and strong management. But the problem is when you talk about performance and comparison, and I'm sure Rupesh would have put up the graph now, and you'll be able to see the performance of Welcher and Combs together have been mixed. Initially, they had gains in Master, Visa, and Davita, helped them beat the S&P 500, as you see in the graph. But in recent years, their portfolio has often lagged behind the S&P 500 and Buffett's performance. Over the past decades, they've averaged around 7.8 annual returns compared to the S&P 500 of 12 and Buffett's of 10.2. Their philosophy of investing seems to be similar to Buffett. Their portfolio management style shows differences compared to Buffett as they hold stocks for shorter periods, an averaging of 2 years and 10 months, where Buffett usually holds on for 4 years and 3 months, and on average. They have a broader range of investments and they're across in many more sectors. Key holdings investments is Apple, significantly contributed to Berkshire's success, and the shares owned is roughly $175 billion. Welcher and Combs have profited from Davita and other companies. Some investments such as Paramount Global and Liberty Media have underperformed, affecting their track record a lot. Challenges and opportunities which we see ahead of us is Welcher and Combs will be managing one of the world's largest portfolios, facing both some advantages and disadvantages. One of the things that will benefit their tenure will be there's a future economic downturn, allowing them to make strategic acquisitions similar to what Buffett did in the past years. As they say, when the blood is there in the market, that's the time you go buying. When people are fearful, you should be greedy. So there seems to be in the horizon, at least in the near future, of economic downturn, which will give ample opportunity for them to move in and take things at a bargain or a discounted price like what Buffett and Charlie had done in the past. Buffett does endorse them. He has praised Welcher and Combs, describing them as sound and brilliant and noting their independent management styles. So, overall evaluation seems to be very clear. We'll have to wait and watch to see what happens after Warren Buffett leaves the helm of Berkshire Hathaway. As I've seen in the graph, and you can see there's much gap between Welcher and Combs, but we do have to give them time, and we have to take Buffett's counsel in this, and his endorsement of both of them should go to a long way in calming investors and the markets as far as Berkshire Hathaway's holdings are concerned. Do put down in the comments below what you think, what you feel, what should happen after Warren leaves. Looking forward to reading them, and I'll see you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.